Welcome to The Explainer. Today we're diving into what is honestly one of the most intense, kind of wild contradictions in modern investing. We are looking at the ultimate tug of war. On one side, staggering, off-the-charts financial growth. On the other, severe, highly documented security concerns. We're going to evaluate the investment potential of a massive e-commerce giant and contrast glowing analyst growth forecasts with some very serious legal red flags.
So, picture this. You're scanning the market, looking for value, and you're hunting for deeply undervalued stocks, specifically the ones trading for under $100. But the core question we really have to ask today is whether an incredibly appealing price tag is actually hiding a massive systemic risk. When a stock looks like an absolute steal, is it just a brilliant bargain, or are you essentially buying into a ticking time bomb?
To get a baseline, let's look at bargains under $100, starting with the traditional pharma value plays. Take pharmaceutical giants like Pfizer or Novo Nordisk. Analysts often point to these as offering deep value. Pfizer is hovering around $25 with a really solid dividend yield, almost 7%. Novo Nordisk sits around $45. But look at the key risks here. Pfizer faces patent cliffs. Novo Nordisk is dealing with rising price competition. These are totally standard, predictable business headaches.
Now contrast those predictable risks with the tip of the iceberg, PDD Holdings, and their absolutely meteoric financial rise.
PDD Holdings. You probably know them as the parent company behind the mega-viral discount app Temu. Right now, this stock is trading near its 52-week low, right around $95. But here's the thing that absolutely staggers analysts: the valuation. It's trading at just 8 times its projected future earnings. I mean, mathematically speaking, it looks like an incredible steal.
And the revenue growth? It is practically vertical. In 2023, PDD hit 247.6 billion RMB in revenue. That is a massive 90% jump in just 1 year. How did they do it? Basically, by gamifying the shopping experience. They added virtual farming games and lotteries, completely capturing the attention of global bargain hunters.
Their profitability is following that exact same trend. Net income skyrocketed 146% year over year in 2023, hitting 60 billion RMB. And the craziest part? They do this with an incredibly light asset model. They don't even actually own the inventory. They literally just play matchmaker between the factory and the buyer, collecting fees along the way.
And this momentum, it just keeps going. Even facing recent trade uncertainties and all the tariff concerns between the US and China, they still posted a whopping $17.7 billion in sales for just the last 3 months of 2023. That was up 12%. It showcases this undeniable, rock-solid consumer resilience. People want bargains, and PDD Holdings is delivering them.
So here's where things get complicated. We have this rapidly growing giant at an absolute bargain valuation of just 8 times future earnings. It looks like a massive win, right? But we have to ask what hidden risks are lurking just below the surface. Because unlike Pfizer or Novo Nordisk, the risks here aren't just about competitors or market share.
Let's look below the surface, specifically at the hidden spyware allegations.
Back in September 2023, a group called Grizzly Research leveled an incredibly severe accusation. Now, we are simply reporting their findings here, but their claim is that the Temu app possesses hidden functions posing urgent national security threats. They actually stated that the software has, and I quote, the full array of characteristics of the most aggressive forms of malware and spyware.
What's truly shocking is how fast this escalated. Temu debuts in the US in 2022, blows up in popularity. By September 2023, Grizzly Research drops their spyware allegations, and this wasn't just some isolated internet rumor. By June 2024, the situation escalated dramatically when the Arkansas Attorney General formally filed a lawsuit based on these exact investigations.
The state lawsuit filed by Arkansas explicitly alleges that Temu is secretly monetizing a broad swath of unauthorized user data. This takes the investment risks far, far beyond the normal patent cliffs or pricing competition we saw with those pharma stocks. We're talking about active state government lawsuits over user privacy. It really makes you wonder about the true price of saving $3 on a garlic press, doesn't it?
So let's bring this all together, the synthesis of staggering growth versus serious security risks.
When you put them side by side, the contrast is kind of mind-blowing. On the one hand, the financial bull case. Financial analysts see a highly resilient, low-cost e-commerce juggernaut, negligible debt, incredible cash flow, deeply discounted valuation. But flip that exact same coin, and security researchers see a dangerous digital Trojan horse, facing serious malware allegations and ongoing legal battles over data monetization.
This is the absolute dual reality of PDD holdings. They have gamified shopping so flawlessly that millions of people are happily buying direct from factory bargains every single day. They even surpassed Alibaba in active buyers. Yet, attached to every one of those cheap purchases is the heavy baggage of unresolved privacy allegations and active state lawsuits.
Which leaves us with the ultimate question as we wrap up this explainer. When you are evaluating a stock trading at just 8 times future earnings with jaw-dropping growth, you have to weigh these qualitative risks. At what point does an incredible financial discount stop being worth the potential cost to data security? It's a fascinating contradiction. And honestly, the market is deciding the answer as we speak. Keep asking the hard questions. And thanks for joining me.